Good morning, everybody. Hope everybody's doing well this morning. Let's get to Tom Gentile in 5, 4, 3, 2.
Hey, good morning, everybody. Tom Gentile here. Welcome to our opening bell, 9:30 a.m. Tuesday, December 7th, 2021. Glad to have you guys hanging out. Man, I love the comments that are coming in here, especially Don J., who remembers me and George since Optionetics. We've come a long way since then. I remember when we first started doing live seminars, Don, you remember, but we were doing live seminars and we had these big plastic sheets and we would draw on them. Remember those projectors that would throw a big light up on the screen? And I mean, I got blind looking at those things. We have come a long way since then. Thank you so much for the comments, and thank you all for the comments, not only here on Monday Morning Live, but live streaming on our YouTube channel at tomstradingroom.com. We're doing that once again today. So, guys, glad to have you here. Hey, take a look above my head. You guys see that? Show me the money. Show me the money. That's kind of the battle cry here. With everyone. Well, I want to show you the money and show you what we've been doing here most recently. Today, I want to talk about revisiting. We're going to revisit GDX. We're going to look at Alibaba because that seems to be on the mind of most people. It's amazing how everybody can go from sell China, short Alibaba, get out of Baidu, don't get into anything that's on China. To all of a sudden, this is the value trade that is just popped up from nowhere. We were discussing this a couple days ago. I talked about it yesterday. I even mentioned it. My son, went and he did what a good trader does. He does not get caught up in the drama. He does not get caught up into, what the herd is doing. And he doubled down on Alibaba and bought at 110. So coming into yesterday, I was talking about that. Well, I actually ended up creating some more some credit by selling puts on Alibaba. I'm going to show you why I did that here, as well as GDX. We're going to look at Stitch Fix. We talked about that last week. We're going to get back into rolling the tide. If there's anything going on with the tide, we'll look at the SFIX results. And of course, Ethereum, Bitcoin. Well, we're getting a little bit of a mending in cryptocurrency. We'll talk about that as well. All right, so let's go ahead and get rolling here. Hey, Ryan, good morning. Hadn't had a chance to chat with you in a day or two, huh?
Yeah, good morning. Good morning. How's it going?
Good. I want to show you the Christmas card. I want to show everybody the Christmas card that's going to be coming out here from the Gentile household. This is from our cats to yours. Merry Christmas. Happy holidays. That one on the left, that's Clara. She's they're both about 2 weeks apart. They both came up on 1 year. So we got 1 year old. I guess I don't know if you call them kittens anymore once they hit the 1 year mark. But Clara over there is Miss Congeniality. You can put anything on her and fix her up. Looks like a stuffed animal. The one on the right, he's about twice as big, and he's not real crazy about wearing anything or even doing anything. Anyway. I thought I'd throw a little personality out in the room just to get things started.
It's a good
I don't know if you have
there.
Cats. I like to consider myself I trade like a cat. All right. So when you look at dogs and cats, dogs are always, the last one to see you leave when you go out the door, and they're the first one to greet you when you come through the door. You could leave 10 minutes later, come back. It looks like they haven't seen you in months. That's the reaction on a dog's face. But cats kind of do their own thing. Cats to me jump up on counters, jump up on bookshelves, and they get this view that the dog doesn't get. The dog gets the view from the ground. The cat gets the view from the air. And so, I like trading like a cat. So anyway, I thought I'd share that with you guys real quick. Let's go from cats to stocks. And the stock I want to talk about first that has been on everybody's mind. It's been on many minds, and even many more of you that are out there talking about this is Alibaba. Okay, so Coming into, if you take a look at Alibaba, I've traded this a handful of times. And what I've been doing with Alibaba is simply trying to go against the grain. Most of the time, I'm getting, I'm picking up money. I'm getting paid, right? So I'm going to walk you through the last few times that I've traded this. So this last big drop down here, we had a spike up in volatility. See these spikes in volatility here? Ryan, you can see them. But can all of you that are with me today, can you see these? These represent extreme levels in option premium. And I like to be on the other side of where everyone else is. And in this case, back in August, everyone was on the was selling the stock, put and call volumes going through the roof. And I'm looking at this and saying to myself, let me sell something. Let me sell some premium. Let me bring some premium in. Well, as soon as we got a little pop, we saw that big drop in premium. So sell high, either cover or let it expire. Did that once, did that twice. I tried doing that last week or last month off the earnings. And the trade got away from me a little bit. Well, guess what? Nothing's 100%. Here we are coming all the way down the bottom here. We make this bottom. And I'm already short. I'm already long this stock via short puts and hit some stop losses, got pulled out of those trades. And then I see what happens yesterday. And I got right back in. And I said, you know what? This trade is not quite over yet. Even though I'm out of it, I'm getting right back into the short side. So I caught that move to the downside here. Okay, what am I effectively doing? If I'm selling puts, I'm effectively going long the market. Now, I'm going to explain this to those of you in the room that all of a sudden I'm speaking Greek to you, all right? If you're one of those folks and you're saying, what the hell is he talking about? All right, tomorrow I'm going to be spending a large amount of time talking about exactly what it is that I do in the world of what's called cash secure put selling, okay? I don't want to get all clogged up in that today, but I wanted to mention Alibaba because that seems to be on the minds of a lot of people, both within the Monday Morning Live community and within mainstream media. Alibaba and all things Chinese have been the discussions of the last couple of days. All right, so just putting that out there to you. We'll revisit this again tomorrow and see if we can find together a trade that has a high probability of profit and, of course, a way of getting into a stock, a good name stock like Alibaba at a discounted price. By the way, my research team right here in the family office believes that even if Alibaba were to get delisted, it's still a $200 to $300 stock easily. And that's based on the fundamentals. That's based on the cash flow. And that's even based on regardless of whether Jack Ma is with or without the company, or whether he even is around. That company shows some very good fundamental promise. And so, and my question is, well, if it's in Hong Kong, what do we do? And the answer is, well, guess what? You trade it in Hong Kong. So anyway, we'll get into more of that and more here later in the program. Actually, I'll be talking about selling puts and cash secured put selling, what it is, how I do it. We'll look at see if we can find some trades as well moving forward. Now, let's talk about GDX. All right. So who was here with me on the GDX trade we were discussing yesterday? Because I want to take this a little bit further, and I want to show you how to automate not just this trade, but many of your trades, show you how to completely automate the trade. All right. So yesterday, talked about this on Monday Morning Live. We talked about GDX, a couple things with GDX. We talked about the stock itself. We talked about the money calendar. We talked about seasonality. All right. And I went into seasonality, not just at 9:30 yesterday, but I did it again at 1 p.m. for a smaller group. And we got well involved in looking at seasonality. And a couple things I want to mention about seasonality. I remember yesterday, I got a question. Someone says, well, what happens in seasonality if we get these big down days? Do you just avoid trading the bulls? Do you avoid trading the bears? And I mentioned one day does not does not affect a 10-year trading pattern. 1 week doesn't even affect a 10-year trading pattern, because if I want to get all emotional and I want to jump from one area to another, if I want to get all emotional and jump to the bear side, wouldn't that have been the absolute worst thing to do now that we have hindsight on yesterday, now that we have hindsight on today? Absolutely. I mean, chasing the market back and forth because of what emotions are doing, not your emotions, but the crowd's emotions. Okay, don't get caught up in the crowd, because I said, you know what? It's the rules-based trader that's going to win in the end. Look at today. Markets are up. All right. Look at what's going on with, by the way, there's a reason why 90% of what you look at, 85 to 90% of my calendar for December has patterns that are going bullish. Yesterday's turnaround, today's extension is just another confirmation of sticking to your rules. All right, so we talked about that. We also talked about the one way to hedge in this market, the one way to, just in case you want to add a level of protection, is look at something that's called non-correlation. Non-correlation. What we're looking at non-correlation is we're looking at the correlation of a stock, all right? In this case, it was GDX to the overall market. And we were looking at something called randomness, okay? Random correlation. And GDX, when you look at it on this chart, this is a 5-month chart, but you can also look at it in the last 30 days. It's going to show you the same thing. It's telling you that GDX doesn't move every single day with the market. So if the S&P is going up, GDX is not always going up. If the S&P is getting hit like it has since mid-November, before we looked at yesterday and today, GDX wasn't moving along with that, right? So that's non-correlation. So after we jumped into spotting the opportunity, we started talking about creating a trading opportunity using options. Yes, we could buy GDX when it was trading a little bit above 30. Now it's trading above 31. But we elected to look at the call options. They were trading around 157 on Friday. They actually opened below 150 this yesterday morning when we were discussing this, right? And quickly traded up into the 180s, right? That 150 to 180 trading range. That's a 20% move just here in the day. Looking for a little more than that. I'm looking for a 50. I'm looking for a 100. I'm looking for, that single, that double. My 50% profit targets, I like to call them singles. 100% profit target, I like to call that a double. Okay? So the one part that I want to add to this conversation, because I don't want to spend all day talking about this train is on its move. We're on the northbound train. We're on a northbound train again. We're going to get some hiccups along the way. That's what happens with almost everything, but you're looking at something that has a January 7th expiration date on it. And so again, what's the rules? Spot the opportunity. Create the alternative risk trade. You have it right here. Then it's plan, execute, and manage. And I got to tell you, this is where a lot of folks, and we'll call them novice traders, tend to muck this up a little bit. So when we talk about placing a limit order, this is what I'm talking about. You're using your broker of choice, okay? This is the part where you're not going to hear me say, get into Robinhood and you and I can get a free stock, or get into Webull and here's my link and we'll both enjoy a free stock. I'm not going to do that to you, okay? I want you to pick the broker that works for you, not a broker that's going to give us a free share of a $2 stock. Now, once you have that broker in place and you're working with them, this is an example of putting this trade on using a limit order. And as you can see here, I'm going to walk you through it. Here's GDX. There's the stock symbol. All right, in this case, we were using call options. And we're buying to open. That's when you open the trade. You're opening the call, buy to open. Okay? From here, that's where you put in the quantity of contracts that you want. Remember, one contract is good for 100 shares of stock. Now, it doesn't mean you're going to get 100 shares of stock. Just keep that in mind. There's leverage there, right? Expiration date, that is the last day that this option will trade. If we are above that expiration date, this could go to automatic assignment afterwards. You could be assigned that or automatic exercise, excuse me. You could then exercise or will be exercised that stock. If you hold this call option past the 7th and we are above $30, come Monday morning, you're going to see some stock in your stocking, right? 30 strike, that is the strike price we looked at yesterday, all right? That is the striking price of which you would exercise if you wanted to, or would automatically be exercised if you fall past that expiration date. By the way, guys, I say this because 99% of option traders get into an option trade with the idea of getting out at some time in the future before expiration. You got your bids and offers at the time. Now I'm looking at this and I do a lot of limit orders. I'll do some market orders, but most of the time I'm looking at it filled at or better than what I think I want to get into that trade at. In this case, we were talking about $1.50 or better. A day-only order just simply means that if this order is not filled by the end of the day, it's canceled. Okay, we've got that. Now, let's get into, for a moment, I want to talk about what happens afterwards, okay? And Kathy says this is the first time she heard you may or may not get filled. You may not get filled. So, yeah, there are partial fills. I get partial fills. In fact, I took a Visa trade, was it 2 weeks ago, and I doubled up and added to that position, and I only got filled a couple of what I really wanted, okay? So that's what we talk about. I wanted to cover that for just a moment with GDX. Yeah, I might get filled on some. I might get filled on all. You know how I get filled on all? If the price is at or below my limit price, that I'm gonna get filled on all. But if we're around that 150, 151 area, you might get a few of what you're looking for. You know, we do see that. All right, so let's take a look here at if you see here, this is a limit order we're going into. Let's talk about getting out. Now, getting out is what we refer to as sell to close. If you buy to open something, you're now getting into a position. So if you're buying to open, then to get out, you're going to reverse that position. You're going to sell to close. I'm selling to close, and that might be a partial quantity, or it might be the full amount. So if I want to sell half of this, and I'm selling two, how much would I have to have in order to sell half? I would need to have 4 contracts in order to sell 2 and get out of half of my trade. So and again, what am I selling? I'm selling the same thing that I bought. I'm selling the Jan 7s. I'm selling the 30s. I'm selling the calls. But I'm going to sell those. If I want to sell them at a 50% profit target, then I'm going to take that $1.50 and I'm going to say, what's 50% of $1.50? That's 75 cents. All right. What's $1.50 plus 75 cents? $2.25. That's my 50% target. So I'm going to put $2.25 in the order. Now, I'll put in a good till canceled order because I don't know if I'm going to get filled today or if it's going to happen sometime in the future. Okay? I don't know. So there you go. So that is the good till canceled, selling half at a 50% target. And I see a lot of you in here know exactly what I'm talking about. Tata, so we talk about Intel, and Tata sold some Intel calls at 93 at the open today. Fantastic, because you know what? We were getting into those for about, I want to say, maybe almost half that value not too long ago. And Intel's really kind of popping up there and doing very well. I mean, huge moves yesterday. So there you go. So now let's add to this conversation just a little bit more. All right? I want to show you this. So selling the remaining at 100% target. That means you would put the same order in, you'd sell the other half, but now your limit order is going to be $3 good till canceled. What does that mean? I'm selling that portion that I still have remaining and a 100% target. So what's 100% of $1.50? Another $1.50. What's $1.50 times 2? 3. I want to sell the other half of that at 3. Again, this is me, okay? I want you to put in what works for you. If you like 25 and 50% targets, if you like 100 and 200% targets. I just think that it makes sense to scale out of some positions, especially if they're call options, especially if they're put options. If you're doing spreads, well, we all know spreads are only going to go up a certain amount, okay? So just keep that in mind. All right, but here's the lesson of this so far. I like buying to open positions as day-only orders. If I don't get filled, then either I'm going to skip that and move on to something else tomorrow, or I'm going to reevaluate it and see if I need to change my order. But when it comes to selling to close, almost every single one of my open positions I put out there to sell to close come with a good till canceled order. That means that I'm looking for that order to hit sometime in the future. Now, at what time would I need to change a good till canceled order? Well, if we're coming up on expiration, we're coming up into the end of the pattern, the end of whatever the reason was to get into the trade in the first place, then I need to make a move. And that means I might need to cancel my good till canceled order and then replace it and change it up to get out of it earlier. All right, so that is GDX. Let me show you two more things. This is a way you can put your profit target and your stop loss in all at the same time. Okay, now I'm kind of getting out of what everybody can do, and you're going to need to jump in there and see, whether or not your platform allows this. This is called an OCO. Okay, it's or a one cancels other or order cancels order, whatever your broker may call it. So I'm using Charles Schwab's Street Smart Central, but translate this into whatever broker that you use. So in this case, notice up here at the top, I got the GDX call options. Now, again, this is after I'm in the trade. If I'm in the trade and I'm saying to myself, all right, I want to get out if it goes up, but if it goes down, if it goes against me, I want to get out too. So this is an example of selling to close the 30 calls with a 100% target. Okay, sell to close, my 30 calls, limit 3. That means if it goes to 3 or higher, I'm out, trade over. Because guess what happens? If this order gets filled, then down here, this gets canceled, right? Let's see what down here is. Well, down here is to sell to close on a stop loss. So let's say that you get that trade at $1.50 and you say, if it goes to 75 cents, I need to cut it and get out. Well, this is a way of of really kind of checkmating the market. So if it goes one way, if you make money, you cancel out the stop loss. But if it goes the other way and you hit the stop loss, it cancels out the profit target. So there you go. You've got yourself set up on both sides. That's called an OCO. How many of you in the room here do OCO trades? I know it's a little bit more complicated. Takes a little bit more time to set up, and so complication, guys. If it were easy, everybody be doing it. Okay, we know this. If this business was an easy business, everybody be doing it. All right. The hard is what makes us all more profitable, because you know what? This isn't Amway. All right. We're not, well, in the room, we're all helping each other, but guys, the one thing I got to mention that a lot of folks here at Monday Morning Live discuss is the fact that we go to war. Okay, we go to war, but here's the thing. One of us is using a bayonet. Some of us are using knives, financial tools. I use options. And I have financial tools to go to war with to sell premium to make money, and I have financial tools that I use to buy option premium to make money. And I use them both, okay? I am not just a call buyer. I am not just a put seller. I use a number of different tools in my arsenal, and I teach them on these programs every single week, all right? 3 days a week I'm here, at least. All right, so here we go. I want to show you a new tool that maybe some of you are not using. So we see a lot of you doing one cancels others. Great. Now I want to show you what I like to call the Christmas gift of trading tools. Now, I mention it because of the Christmas ago. So, we come around Christmas and, this is the time in which we like to give out gifts. Now, I've got my team, all right? My team. What's my team consist of? Well, my team consists of a lot of folks, all right? I've got Mike. I've got Jeff. I've got Joe. I've got Jay. I've got a lot of J's and, J's, but I got programmers. I got people that help support me in our team. And so, Christmas comes around. I want to get them all gifts. Now, here's what I run into. One's a meat eater. One's a vegan. One's a pescatarian. One's this, one's that. One doesn't like alcohol. All of a sudden, I'm like, wow, what am I left with? Because I want to send a gift, but at the same time, I want to set everything up where I'm able to send a gift that everybody likes, that it's going to hit everybody's, tick everybody's box. And at the same time, I can put each of their addresses in and then hit that button, and that thing just goes out to everybody. All right. Now I want to show you, gift cards. There you go, Tony. Now I want to show you what I like to call the gift card of the markets. And so here you go. You ready? See if your broker does this. I call this, what WTF is this? This is a one trade ticket called an OTT. All right. You down with OTT? Yeah, you know me. I'm down with OTT. So OTT stands for one triggers two. One triggers two looks like this. All right. So look up here at the top. This part is the entry. I'm buying to open. This could be anything. Okay. Now, this typically works on calls and puts. When you start getting into advanced trades, like spreads or butterflies, you might not have this as an option. Okay. But I'm showing it to you using GDX. So, guys, GDX call. Here's the entry. Here's what we're buying to open. Here's that day only order. Here's the limit price. Now, OTT means that, again, I'm going to have to do a rap song on this. I can see that. Oh my God. It's coming to me right now. All right. So one triggers two. Here you go. So once this gets filled, then the other two get triggered. So none of this works until the number one part at the top gets filled. Okay. Now you've got your order number two. That's the sell to close. All right. So that's the sell to close. And I can do that as a limit. And then number three could be a stop. So you could put in the entry and then the profit and then the stop loss. OTT. Okay. You down with OTT? Yeah, you know me. Okay. And I'll fill in the rest of I'll fill in the rest of this sometime in the future. I'm gonna have to jot some stuff down. All right. Good job, guys. All right, let's go ahead and let's move forward as we are approaching the top of the hour. I got a lot more I want to cover with you, and I'm going to break this down into, oh gosh. Hey, Ryan, give me 10 minutes on the clock there, please.
10 minutes, you got it.
Make sure that we are going to cover everything that we want to do today. And guys, like I said, I hope you enjoyed the order screen. I know that is a little bit hard to read there. As I come in, I can, I try to blow this up as I can. It's called an OTT. One triggers two. And again, your broker may offer it and it may not, or it may offer something similar. Okay. One triggers two. You get in, you get out of the profit, you get out of the loss. It's that simple. All right. Let's kind of move forward and we're going to talk about unusual calls and unusual puts. All right. There is really nothing usual about the stock market. But what I do as a data miner is I go out and I look for things that are not obvious. All right. One of the ways we do this is with about a half a dozen lists that we put out there to the community. And that community is you. All right. So if you have a phone like the iPhone here that I have, all right, I like to call this my $1,200 calculator. Or if you have a Android device, then check out Tom's Option Tools. Tom's Option Tools, if you go and do a scan on that, all right, go do a search on that. You're going to find it in the Google Play Store or the iPhone Store. Download our suite of tools. Now, you're not going to be able to use every single one of them. First, you got to get past the login page. If you've got a username and password with us as part of our Tom's Option Tools software, just use your username and password. If you don't, Below that, you're going to see something called non-subscriber login. Fill that information out, and I'm going to give you access to this one. Down here at the bottom, it says Morning Report. And you click on Morning Report, and you're going to get the 6 different reports like I'm showing right over here on the right-hand side of the screen. Today, we're going to look at unusual calls and unusual puts. On your phone, it's going to be nice and colorful like this, so you'll be able to see what's moving around, right? But I'm going to put it on the screen and blow it up so we can all see the unusual calls and unusual puts. What are unusual calls? What are unusual puts? These are a list of calls and puts that have, for the last 30 days, traded in an average range in terms of volume. But yesterday, the entire day, we had spikes in unusual calls and unusual puts over various strike prices across various stocks. I want to show you how we can look at that right now. So I'm going to pop over and I'm going to blow this up so everybody can see it. There you go. And we do offer this on the desktop on tomsoptiontools.com. I believe we have a 14-day free trial out there if you're interested, and that is part of what we offer over our tools. So take a look at Uber at the very top of the list here. Okay, so the way you read this is this left side, unusually high call option volume, right side, unusually high put option volume. Let's talk about the left side. I see Uber, CCJ, Intel. Wow. Oh, there was a lot of call buying on Intel yesterday for sure. Pfizer's on here, BMY, Metaverse platforms, Meta Platforms is on here, Caterpillar, PayPal, Schlumberger, and rounding out the top 10, AMD. It's not very often that I can look at an unusually high call list or an unusually high put list and be able to see and know all those symbols, right? Because this tells me yesterday was a big move to the upside because they were buying everything. The cool kids, all right? I'm talking about these. These are the cool kids, all right? They're the most popular, and the cool kids were being bought. And you know what? Over here on this side, on the high put option volume, I venture to say a lot of these cool kids, not all of them, but a lot of these cool kids were being sold because they had higher than average volatility. But really the only way to figure that out is to dive in. Let's take a look at Uber. So if you look at Uber here, you can see that Uber, I've got an option symbol here. This is 2209.16. That's the September 16th, 2022, 42 and a half calls. Now, reason that's unusual is number one, this is looking at something that is, we're going into 2022. This is options that expire almost a year from now. That's very unusual. What is going on with Uber? We'd have to take a little bit more look. I'm going to show you how we do that here in just a moment. But coming down the board, I can see CCJ. These are all 2022 options for the first 5. Then I've got, here we go, Meta Platforms, 1223, those 300 calls, right? Those were traded. Caterpillar, PayPal, Schlumberger, AMD. If I go and click on one of these, I'm going to get some more information about exactly what's going on with that call option, and if I were to buy it, what it would represent. In this case, I see that Meta Platforms, by the way, Meta, I was looking at the Bloomberg terminal. That's that $50,000 a year terminal I pay to have access for. That was telling me that, I don't want to say Facebook, Meta Platforms is trading at 40% below its peers. And people were still not, at the time, not buying it. Well, there was a lot of buying that went on yesterday. And so you saw, that's one of the reasons why you saw that 300 call moving up in value. If you take the mean average of where this thing was just 6 months ago and now, you're talking about something that's trading near, that should be trading near 350, okay? $350. So that's just, I'm just giving you a pure value. I haven't looked at signals. I haven't looked at rules. I'm just telling you what I saw on the Bloomberg terminal yesterday. I wanted to pass that on to those of you that are out there. So my morning report, I can jump in and I can actually look at these call options. If I come over and click on the stock symbol, the stock symbol is going to give it to me this way. I have, in this case, I'm looking at Here is the stock close. You can see what happened with the stock close and that pop up. Okay. Here's your bid and your offer. Again, we're looking at Uber now, guys, not Meta. So don't look up here and say, wait a minute, that doesn't look like that doesn't make sense. Uber is, trading in the high 30s. And then here you go. Here's your bid and offer on the actual 42 half calls. Notice how cheap they got. Now they're starting to kind of roll up a little bit. We can look at IV. The IV is on the high side. Then we can look at all the other Delta Greeks too. Okay, all of this is something that I have access to go into as I'm doing some research on my morning report. Okay, Intel's on here, Pfizer's on here. You think Pfizer's on here has something to do with the name that vaccine game that we began, or name that variant? All right, name that variant we talked about yesterday, and the variant Omicron is now, obviously we're getting calloused to a lot of this. I mentioned this too. You get the variant name, everybody starts to get a little nervous. After we hear it a little bit more, then the markets digest that, and then we start to move in the direction we're looking for. All right. PayPal, Slumbers, AMD. Let's look at the put side for a moment. I see Disney at the top of the list. DIS. This is the 12/17. That's the December 17th of this month. 165 puts. Let's go take a look at Disney. And when I look at Disney, I can see Disney stock has just gotten beat up, right? It found a bottom a few days ago. Nobody mentioned anything about this, okay? And I mean myself included. I'm going to tell you why I didn't mention it, because I didn't have any signals on Disney. All right, I didn't see Disney as something that was worthy of me spending any time on. But what we did notice is that it did catch some offers, right? Look here, high volatility, or bid ask on this went higher and then dropped again. The IV up and then down. So last week, put premium, call premium, very, very expensive. This week, it got very cheap. So if you like Disney, for whatever reason, guess what it's time to do, guys? It's time to buy calls on Disney if it fits your wheelhouse. And the reason why is because of this area right here, okay? The fact that volatility was trading in the high 30s just a day or two ago, and now we're trading in the low 20s. Options just got 50% cheaper yesterday in just a day, right? And then, of course, we can look at Greeks. And my guy, Joe, if you guys ever listen to Joe Contest, he does a great session on the Greeks, all right? He is my support. He is my go-to guy when I look at these Greeks. But that is our unusual calls and unusual puts for today. I will tell you this, I did not find any rules-based trading signals when looking at unusual calls and puts, but I wanted to bring them up anyway to show you what it is that's out there that's popping, all right? What's popping in terms of high call option volume, and what's popping in terms of high put option volume, all right? So there you go. All right, so as we turn the page on our 10-minute timer, here it comes. I'm waiting for it, Ryan. Where's the bell? I don't hear the bell.
Oh, did it not go through? Oh.
That's okay. Hey, do me a favor. Let's put another 10 minutes on the clock.
You got it.
I want to talk about rolling tide. All right? Roll tide, and I'm not talking about how Alabama just rolled over Georgia last weekend in probably the biggest college game of the year, let alone the biggest college game of the weekend. All right, I want to talk about what we did with Rolling Tide last week, and I want to show you some stuff that's on my watch list today as we move forward. So Rolling Tide, remember what I was talking about with Rolling Tide? We were talking in a lot in part about, again, two different strategies. The strategy we do before an event and the strategy we do after an event. So last week we were talking about tide rolling in. We look at like 1 to 2 weeks prior to earnings. There are stocks that give us patterns of both price and volatility rising into a day of earnings. And this is the best time to be buying options, okay? Think about this. What do you think the number one reason is out there, whether you're listening to me on YouTube or whether you're listening to me right here in the Monday Morning Live Chat? What do you think the number one reason is that people buy call options? Okay? Maybe not your reason. I'm talking about what the number one reason is that the herd buys calls or that the herd buys puts for. What is it? They think the stock is going up. That I don't have to go any farther than what the bus just said. All right? Hop on the bus because that's what the majority of people are doing. They go, "Oh, I think something's going to go up, therefore I buy. I think, therefore I buy." Let me tell you something. Those two words could not be farther apart when it comes to making consistent money in the markets. Think and buy, or fear and sell, are just words you do not want to put in the same sentence. And the reason why is because, it's cheaper than a stock. That's another reason. Okay? That's a level one way of thinking when it comes to option trading. I went through 3 levels as an option trader. I have to think very far back to tell you what I'm talking about here. My 3 levels were this. Wow, I think it's going up. I'll buy the stock. And then a little birdie whispers in my ear, buy the call options. They're cheaper. Oh, I think it's going up, so I'll buy calls. And then I wondered why the calls went down even when the stock went up. Didn't understand what call options really were. Didn't understand they had an expiration date like milk. And then I started getting to what I call level 2. And level 2 was the time value in options. And I'm like, wow, okay, I have to time this out a little bit better. It's not just about price. It's about time. And then we talk about the level 3 trader. And that's the trading like a cat level I talked about at the beginning of the show. You want to trade like a cat, you got to think about price, time, and volatility. Volatility, if you find a way to be able to chart volatility, if you could find a way, we can all look at volatility on the screen. I do it all the time here, folks. I talk about it all the time. You know what? Let me just show you the chart we started with today. See that Alibaba? There's your price chart. That's the candlestick. There's our option volatility. Where we like to look at buying it low and selling it high. But Tom, how do you know what low is? And how do you know what high is? You really don't. Okay? This is the part where we have to have data mining to give us ideas of where low is likely to be, to give us ideas of where high is likely to be. Right? Some of the areas where I find highs are wrapped up around earnings. That's typically going to be a top in volatility. Now, if we know that top is coming, and we've been able to go back and research, now it doesn't happen on all stocks, but if we're able to go back and research, hey, this stock seems to keep going up right before earnings, the volatility on the options, the calls and the puts. Maybe I need to be buying the calls or buying the puts a week or 2 prior to earnings before everybody else starts talking about them and the cattle come in and rush in. Okay? Only fools rush in the day before or the day of earnings. Now, guess what? They're going to get right. They're going to get it right every once in a while. A broken clock. I've said this before. A broken clock's right twice a day. But for the rest of the day and the rest of the night, it's not right, and it doesn't work. And the same holds true to trading options volume and volatility. Okay, so where am I going with this? Well, we talked about, remember, I had this discussion back, we were looking at Compaq, and we were looking at patterns, and we were recognizing patterns, and there was a pattern in Hewlett-Packard. I call it Compaq, but Hewlett-Packard. And Hewlett-Packard tend to go up the week prior to earnings. And so we saw the price going up the week prior to earnings, but it doesn't necessarily mean the options are going to go up too. But what we did notice is there was also a pattern of options prices, option premium going higher too. So when we saw high price rising, and volatility rising, that's the time to buy the calls. And we all know when the earnings are coming out, so you have an exit date, which is any time prior to earnings. Okay, so we did that. We realized in this case it was 8 calendar days with Hewlett-Packard. And then what did we do? We looked at Hewlett-Packard, and I showed you an example where you're buying Hewlett-Packard and you're selling it right before earnings. Worked great, okay? This doesn't work all the time. Nothing does. But over time, consistency is the key to turning this from a hobby into a business, into a side hustle, into your main event, whatever it is that you want it to be. Now, last week, we called that last week today, but I'm showing you this last week. Stitch Fix. Remember Stitch Fix? So Stitch Fix had some interesting patterns with it. I want to share those patterns with you now. Let's move to the next chart for a moment. This pattern was easy to see. All right. Remember this pattern, everyone? Remember I showed you up, 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 and here we go again. And there's earnings, and there's earnings, and there's earnings. And what happened after earnings? Complete nosedive, complete nosedive, complete nosebleed to nosedive. This was not the price of Stitch Fix. This was us mining the options data and seeing all of this noise and all these people rushing in to buy calls and buy puts, okay? Because you have two types of traders here. Again, this is a zero-sum game, guys. For every person in the options market that is bullish, either by buying calls or selling puts, there is a completely opposite. There's somebody else on the other side of that trade that's convinced you're wrong and they're right. And so in here, we saw a lot of call and put buyers coming in as we got closer and closer to earnings. They're all thinking, the call buyers are thinking, oh, Stitch Fix is finally going to have a good quarter and this stock's going to pop. And then there were those that were on the trend trading side that said, oh, Stitch Fix is going down, I'm buying puts. All right. And they were doing it as we were getting to earnings because they wanted to go through earnings. That's not what we want to do. We want to be the scalpers. We want to sell them that. Okay. What ended up happening? The other pattern we saw was that we saw a pattern of Stitch Fix going down the week prior to earnings. And sometimes it was more and sometimes it was less. All right. And we said, all right, let's look at puts, because if something goes down, if a stock goes down in price 3 out of the last 4 quarters and the volatility goes up 4 of the last 4 quarters, then price going down, vol going up, buy puts. That's why I showed you last week the looking at the December 10th, 26 put. It was trading for $2.79, right? And so you see that, and we saw the earnings were coming out on 12/7. What's today? 12/7. When did the earnings come out for Stitch Fix? AMC, that's not the theater. AMC stands for after market close. It's coming out today. Well, we've had a 75% win rate trading this particular strategy. That's, that slider, I like to call it. Sliding in a week to 2 weeks prior to earnings and then sliding out when everybody else is piling in. They're all piling in. But this trade had exits earlier than today. So take a look at this here. So I have some numbers that I want to share with you guys. I'm going to blow this up. So any of you that are concerned about the blurriness, I'm going to try to unblur it for you. Right? All of this over here might be Greek to you, but I want to take you through this. This IV change, this gives me the average change in options where the volatility of the options actually increase in value. Now, we do have time decay. That happens with every option. Okay, time decay is part of an option. We also could get an effect on how well the option is going to move relative to the price. In this case, that 37 basically means that if Stitch Fix drops a point, I should expect 37 cents to come into my puts, right? This 30/60 over here, all right? So this tells me that the average return on this strategy, buying these puts, coming into earnings over the last year was about 30%. That's what all of this means. All right, so guess what we do next? Well, again, we talked about this rules-based trading strategy. Let me rewind and repeat this, and then I'm going to talk a little bit about crypto. We spot a rules-based opportunity. We create that alternative risk trade. In this case, it was the puts. And it's time to place the order. So you place the order. We talked about placing it as a day-only order. It was trading, like I said, 280. So, even if you looked at it at $3, all right, we'll see where it went from 3. Then you place the exit order. And I talked about 30 to 50%, 30%, because guess what? I have the data that tells me the average move was 30%. Why not trade it to the average? Didn't sound like a lot of you in the room are like, 30%, 30%. Okay. And we talk about placing the exit order based on time, which was December 7th. Well, what happened? What happened, Tom? Let's talk about what happened. Here is the last week of what happened with Stitch Fix. So there you go. Tuesday, we opened at 280. Look what happened. By the way, by Wednesday afternoon, this trade was already hit its 30% increase. We talked about that on Wednesday. Thursday, Friday, Friday, Monday, yesterday, we opened at $5.25. This thing had that's not a 53%, guys. That's an 80% increase from 280 to 525, all right? 80% increase. So again, what's on my watch list right now? Let's just jump right to it. Let's talk about what's on the watch list. By the way, what happens? How do you get out of something? When you're in something, how do you get out of it when it hits a target? Here's a hint. I talked about it a little while ago. Well, it was about 10, 15 minutes ago. Limit orders. Profit target set ahead of time. All right. Let's see what's going on with this. So moving forward, what's on the watch list? Oh, what's on the watch list? What's on the watch list? Let's take a look at what I see happening. All right, so these are the top stocks I'm looking at. Over here, these are earnings that are coming out in 2 days, 3 days, 9, 10 days. The 2 and 3 day trades, they're gone, all right? I'm going to look at something on the sell side of those. Maybe we'll have a talk about it tomorrow. And then over here, FedEx, Accenture, then I've got Adobe, Nike, and Micron. I've got those check marked, and I've got them highlighted. And the reason I check marked and highlighted them is this. For the last 4 quarters, Adobe, Nike, and Micron all had one thing in common. You know what that was? They all moved up in price. See these positive numbers? Those are percentages. Moved up 1% before earnings, 3, 4, 3. These are all 1 to 2 weeks in that sweet spot. Look at this, 2543, 4877. These are moving, all right? This had a 6.92% average move on the stock prior to earnings. Micron, Nike, Adobe. So I'm saying to myself, all right, here's something that's on the watch list. Maybe I need to take a look at these now. Then I move forward and I say, okay, how's the volatility? What does the option premium tell us? What's it do before earnings? As long as it's going up most of the time, which by the way, it is, we saw a couple of drops. That's because we've had some very interesting moves in the markets this year. But on average, these guys are moving up in volatility as well. All right? These are all potential call buys going into their earnings. I thought I would throw that out there and show that to you on the watch list, guys. What do you think? Yeah, Joe's like, Adobe's up 30 points today. Well, hey, there's 2 others we could look at. I haven't had a chance to look at them yet, guys. But there you go. All right. And we can look at them. Let's move over here. Bitcoin about to hit 52,000. We'll talk about that in 1 minute. All right. ADBE. Let's take a look. There you go. Up 30 points today, up 5%. Micron, MU. Here's up a 4% move. I mean, they're getting moves like this, guys, because everybody's been shorting this stuff. And all of a sudden, even the lack of news, even the lack of news yesterday or the exhale of the market is pushing everything tech higher today. All right, Amazon, Google, Tesla. These are all premium sellers that I sell premium on. They're all up big today. All right, so you take a look, you can see here's Micron. What was my third one? Nike. Let's take a look at Nike. NKE. right? So this is the one that's up the least. Maybe that's the one to take a look at. It's up as well. These three stocks have a tendency to go up into their earnings. They've been doing it now over the last year, and the call option volume tend to go up as well. All right, take a quick look at the board. Any idea when your money counter will get updated for December? We talked showing it yesterday. If it's something that is on a screen, I'll make sure that that our folks know about that. But that's been updated. In fact, if you look at it on our software, then you'll see. Let's pop over and go to the tools, go to the calendar. I see December right there in front of me. There's December. Whether it needs to be updated on a screen, as an image, I'll double check that floor to Dan, and we'll see where that goes. How you guys doing over in the YouTube world? I see you out there. Michael, good to see you in here. Memory, always glad to see you as well. Karen, Barbara, Don, Lila, Eric, Sandy, good to see all of you in the room today. So let's finish up our last 3 or 4 minutes. Let's talk about cryptocurrency. Oh, by the way, guys, the biggest question, I missed this, I'm sorry. Do I have a service that allows you to follow me in battle when it comes to these event-driven markets? Well, I do. All right, it's called Operation Surge Strike. You can find out information on Operation Surge Strike. I'm sure one of our esteemed colleagues there in the back of the room can put a link up on the screen for anybody that's interested in signing up for that alert service. But here's what we did last month with Operation Surge Strike. As you can see, there were 3 losers out there. Okay, again, nothing is 100%. I'm going to tell you that. I mean, yeah, I do have a service. I think it's up 100. This has 100% winners this year. All right, how long that lasts, I don't know. And we'll talk about that tomorrow. But today I'm looking at something that had 1, 2, 3, 4, 5, 6, 7, 8, 8 winners. Actually, 7 winners, 1 break even, and 3 losers. And combined average on all those positions that are closed was 35%. Average holding period was 9 days. 9 days. It's called Operation Surge Strike, and maybe one of the crew can give you a link if you're interested in joining. Okay, so let's talk about cryptocurrency as I'm finishing up the session here. News. I'm going to blow through the news pretty quickly here, guys. So some new stuff that's happening. Did you know that Goldman Sachs is actually allowing Bitcoin now as collateral? Yes, you heard it. Goldman Sachs is going to allow Bitcoin and possibly other coins to be looking at collateral, and they're going to use that now in the futures markets, and that could change and continue to be something even bigger. Number 2, take a look at Fidelity. You know, we're having trouble launching an ETF here in the States. A lot of you might say, no, we're not having trouble, Tom. I see half a dozen ETFs. Bido was the first one that came out. That's an ETF based on futures. I'm talking about an ETF based on the cash, based on the physical BTC. Well, guess what? Canada's doing it. In what world is Canada beating the US? This world. It's not just hockey. It's Bitcoin ETFs. So Fidelity tried to launch an ETF in the US. The SEC is yet to approve that one or any ETFs yet that are tied to the physical commodity, that physical coin. Canada's doing it. And number 3, Square is changing their name. All right. They're going to change their name to Block. You know, I remember another company that did that. It was a while back. What was that company called? I don't remember what they were called, but you know what they're called now? Riot Blockchain. But they were also a biotech company that became a Bitcoin mining company. They changed not just their name, they changed their entire business model. Square's changing its name too. And I'll tell you what, if you think Square moved with Bitcoin before, when they change that name to Block, when that becomes more mainstream media, everybody starts hearing about blockchain, it's going to push that stock just from the advertisement and the branding alone with that new name. Okay. So in summary with crypto, let me just mention this. We're getting a bounce across the board. It's happening in Bitcoin. It's happening in Ethereum. It's happening in a lot of small coins. I call it the FOSO bounce, okay? Not FOMO, fear of missing out. Fear of selling out is what happened the last couple of days in BTC. A lot of people got nervous, sold out at the wrong time, and we saw the bounce that took us down into what, 44,000? We're almost hitting 52 now, coming back. Microcurrency traders, this one's for you. Look for an alert later today in your inbox. We got something coming out to you today. And also for those of you that are interested in joining me for an additional day. Now, I'm here Mondays, Tuesdays, and Wednesdays at 9:30. Additional day for you? I got one for you. Thursday morning, 9:30, I'm hacking somebody else's program. I'm taking over for the 9:30 show, and we're going to be doing a special crypto-only event. That's why I haven't done anything with crypto so far this week. So I'm planning on showing you the money, all right, up there. Show you the money. I want to show you the coin, all right? We're going to talk about a new coin. I'm going to tell you what it is. I'm going to tell you how we found it. And I'm going to tell you how we got in it and much, much more. Thursday at 9:30. Join me then. Guys, I'm back again tomorrow, and we are going to get into my 100% winning track record for this year, 2021. And how we do it, maybe we'll find a stock or two. Who knows? Anyway, glad to hang out with you here for the hour. Chris is up next. Have a great show, Chris. You guys have a great rest of your day. I'll see you tomorrow, same time, same channel. Bye now.